Hello, everyone, and welcome to the first Business and Markets Day in the week as we reopen on Broad Street this Wednesday. Of course, Monday through Tuesday has been a public holiday, so we're back for the first business day. We've got 3 days left to make the best of the current business week. I am boasting them for you. Let's get the show started here on Channels Television. President Buhari making the first statement on the state of the economy and the market since the new year started, specifically speaking to the FX market. President Buhari is moving in on his economic diversification agenda, saying he has directed the Central Bank of Nigeria to stop providing foreign exchange imports, foreign exchange for food imports. According to a statement credited to the media aid on Tuesday evening, quoting President Buhari as saying that the foreign reserves will be conserved and utilized strictly for diversification of the economy and not for encouraging more dependence on foreign food imports bills. End of quote. Of course, the central bank has restricted official foreign exchange sourcing for some agro products like palm oil and rice. And recently, the central bank moved in on cotton, looking to bring back Nigeria's moribund textile industry. And after that, just about 3 weeks ago, the central bank moved in on milk imports, which generated quite a number of reactions as to where the central bank is going. So if you look at what has been done over the last few years, the central bank has moved in FX restrictions on a number of food items. Buhari's administration has faced nearly 4 years of hard foreign exchange earnings, which has resulted in FX restrictions on some 43 items. Of course, there were 41. That figure is climbing rapidly. And the financial regulator, the central bank itself, has done some direct interventions in key sectors, as well as using policy tools, monetary policy tools, that is, on commercial banks to redirect their credit into areas involving agriculture and domestic manufacturing. The central bank chief, Godwin Emefiele, has also variously spoken on government's policy on import substitution, backward integration, and a cutback in official FX sourcing and the curbing of smuggled goods items into Nigeria. The central bank believes that Nigeria can produce a number of agro-products or food locally instead of importing them. We'll try to get the first word and unpack this breaking story that came overnight for everyone to understand where we are on this at the moment. But let's check in quickly with the marketplace. How did we finish off on Friday at the stock markets and a few other markets that we cover for you here on a daily basis? The Nigerian stock market, all-share index softened 1.17% on a Friday that was the Friday before the long Muslim holiday, and the index sank to 27,306.8. The total naira value of the equity market was around that figure, 13.307 trillion. This is giving you a summary, a snapshot of the secondary data, primary data, beg your pardon. That's 1.08 billion shares traded last week for 12.01 billion naira in a little over 16,000 transactions. But if you check through the 5 main sectors which attract most attention all the time, the banking sector fell the most in the week we just finished before the holiday. That was a very heavy beating for the banking sector, 6.05%. Consumer goods came in a little bit also in the water, but less than 1%. You can see the figure there, not 0.65. And industrial goods made a singular green showing among the big 5, as it were, 1.32% in the green territory. Insurance fell 3.88%, and I'm sure you know the story out there. The recapitalization program of the industry, the regulator, NICOM, has asked all insurance companies to submit their recapitalization program before the end of this month. They have just about a week to conclude that. Oil and gas was negative 1.62%. That gives you a summary of where we finished off the stock exchange on Friday. before the long holiday.